For more on oil's big slide and what's next as energy remains under pressure, let's bring in John Kilduff. He's founding partner at Again Capital and a CNBC contributor. It's good to see you, John. Do you think these declines will persist in terms of the price level and, potentially demand as well?
Yeah, I think there is probably some more downward pressure on prices here in the coming weeks. December, as Tippa was just referencing, I believe that December is going to be a warmer month based on the weather models we're seeing. So that's going to help the distillate fuel situation, the heating oil situation here in the United States, and also obviously abroad in Europe. The question I have a little bit is that this winter is nowhere, it's not going to be as mild as last winter, if you recall that one. That was a ridiculous one. But we also have a new weather pattern in the South Pacific that should generate some pretty decent sized snowstorms, clips of severe cold weather and a cold, wet spring. So we'll have to see. But certainly for now, this is a downward pressure because of a lack of geopolitical jitters. And the really inability of OPEC Plus to do much more than they're already trying to do to try to stabilize the price, particularly when they have the thorn in their side of the United States and North America in general in terms of massive crude oil exports now and refined product exports.
Your weather forecast sounds really unappealing. A wet, cold spring after a wet, cold, snowy winter. But at any rate, let's move on. So taking all of that into account, as we look at the benchmark crude prices now below $80 a barrel, what do you think the range of those prices is between now and the spring?
To the downside, it'll be hard for us to get much below 65 or 62, Tyler. But to the upside, look, as we've been seeing since the Ukraine war began, jitters in the oil market abound. And certainly the rhetoric, not just from the protagonists, the countries, the leaders of the supply and the like, but also, a lot of analysts out there jump on the train too. And I compare it to telling scary stories around the fire pit in the summertime. It gets the price juiced. So, I mean, given if things were to go south in the Middle East, if things were to really get tough by the Saudis, if they were to do even more, or there's a problem in Russia, any kind of supply disruption, let me put it that way, certainly gets us back to the $90 mark. Getting above 100, though, will be tough. But we would need, beyond that, central banks to ease, China to really step up and try to juice their economy. And these are big inputs that I just don't see on the horizon. But 90 to 100, Tyler, is certainly, I think, the upward bound that'll be hard to break out of.
Hard to break out of to the upside. What about to the downside?
Yeah, I just don't see us being able to get, much below $60 a barrel. Again, because of what the Saudis are doing, I can't discount them completely as much as I'd like to. And despite what the United States is doing in terms of crude oil exports and refined product exports, the Saudis still and always will matter. So to the extent they get consternated here with this persistent low price, they may try to go for the jugular and really squeeze us. But, for now, it's status quo, and there's a downward pressure here until we get some real, bouts of cold weather, which again, for December, if December ends up being a bust in terms of heating demand, it's going to be game over for that input as well by come the turn of the new year.
All right, John Kilduff, Again Capital. We appreciate it.